Hi there, welcome to Kneppy Invests. In this video, I am going to discuss the epic day that Afterpay had on August the 2nd, 2021. They released two bits of news flow during the morning. The first bit of news was something we expected this time of year from the company. But the second bit of news, and more than likely you would have heard this, is company changing for Afterpay. Now, to discuss why this company changing news from Afterpay will be highly beneficial to the company, and also talk about why it's highly beneficial to the other company that's involved with this bit of news. And then towards the end of the video, I am going to discuss the importance of patience. Even though I don't have a direct holding in Afterpay, I do have an indirect holding on another exchange overseas, which is actually on the London Exchange. And I'll talk about how I got that indirect holding and why, because it's harder to sell out of that indirect holding than if I was holding on to Afterpay directly, why that little bit of pain of selling out of my indirect holding has led to me to be patient in maintaining that holding, and that has been highly beneficial to my returns over the past 18 months. The first bit of news that Afterpay did release, and this was probably of lower importance overall, was a trading update on their financial year 21. And whenever Afterpay does release a trading update, I do look at it and I pay particular attention to how they're performing in the UK, because that does affect my indirect holding. So I'll briefly touch upon the trading update in the next few slides. But the bit of news that really affected Afterpay's share price, and I do think is company changing, is that Afterpay is being acquired by US company Square. And I am going to talk about why this acquisition of Afterpay by Square is going to be of benefit to not only Afterpay, but also Square itself. Before we get to the acquisition of Afterpay by Square, I just want to talk about Afterpay's financial year 21 update. Whenever I look at these updates, I focus mostly on how Clearpay is performing. That is their UK and European operations. And Clearpay has been performing exceptionally well over the past few years, and that's continued in the last year. But everything is growing. Although when you do look at customers' growth in Australia and New Zealand, that is slowing down and it is not growing very strongly. Only grew 8% in the past year. In a way, you can say that buy now, pay later has almost reached maturity in this country. But the one thing that is growing in Australia and New Zealand is active merchants. So more retail shops and places like that are making Afterpay available, which means even though the customers aren't growing, the fact that merchants are growing, that means the underlying sales have grown at 44% in Australia and New Zealand. North America, underlying sales, customers and merchants are growing really strongly at about 100% for each, or over or just under. But Clearpay has been growing exceptionally well in all three categories. In fact, active merchants for Clearpay has grown 501% in the past year. And that does, as an indirect holder of Afterpay through Clearpay, that is making me quite happy. Now on to the acquisition of Afterpay by Square and why it's beneficial for both companies. And the main strategic reasoning behind this acquisition is both companies are not the leader in their space. They are trying to catch up to the leader, which might surprise some viewers of this video when I say that Afterpay is not the buy now, pay later leader. They are not. They are trying to catch up to the leader. And I'll talk about that in the next slide, but I'll just focus on Square in this bit of the video. So what does Square do? A good way to look at Square is they have two divisions. They have a sellers area and a cash app. The sellers is just 30 software, hardware, and financial service products they offer to sellers. And the cash app is financial tools for individuals, which include peer-to-peer payments, cash card transactions, and Bitcoin and stock investings, and many other things as well. Sellers can accept payments in person via Square Invoices, Square Virtual Terminal, or seller's website. Square also provides the hardware to facilitate the transactions like Square Stand, Square Register, and Square Terminal. But the main thing here is Cash App, and they don't have a buy now, pay later feature on their Cash App until this acquisition. And their main competitor and the leader in this space is PayPal. And PayPal have announced they have developed a buy now, pay later feature in their app. And Square needed that feature to maintain some sort of, or keeping PayPal in their site. If they didn't have this feature, they would have fallen well behind PayPal. So instead of deciding to develop their own buy now, pay later feature, they decided to acquire Afterpay and put Afterpay as their buy now, pay later feature in their Cash App. And that's the main reasoning behind Square's acquisition of Afterpay, is to maintain PayPal within their sites or to catch up to PayPal in the next few years. It has been interesting over the past few days. I have listened to quite a few American analysts' thoughts about this acquisition of Afterpay by Square. And it seems like the overwhelming consensus was this was a necessary and a good acquisition. However, they did overpay by quite a bit, which does justify my thoughts that Afterpay is overvalued at over $100 on the Australian exchange. And when you compare Afterpay's valuation to other buy now, pay later companies like Affirm or even Zip on the Australian market, but definitely to Klarna, which is the world leader when it comes to buy now, pay later. So there's going to be a lot of Australian viewers of this channel who will be surprised by that, because we are being told continually that Afterpay is the world leader. It is the first mover in buy now, pay later. It is not. Klarna was formed in 2005. So that's about 8 to 9 years before Afterpay. Klarna has 90 million worldwide customers. Afterpay is less than 20 million. Klarna is a behemoth when you compare it to Afterpay. And when you look at the American numbers, and all these buy now, pay later companies are focused in America. They want to win customers in America because that's where the growth is over the next 5 years. Klarna doubled their customers in the past year. Afterpay also doubled their customers. But Afterpay had to more than double their customers to try to catch up to Klarna. Because if both are doubling their numbers and Klarna is on a higher base, that means the amount of Klarna has compared to Afterpay has increased by a significant amount. And if I remember correctly, Klarna increased their customers from 10 million to 20 million. And I just listened to the CEO of Klarna the other day, about 2 days ago, and he has mentioned that the North American customers is up to 20 million. So they've increased or doubled from 10 million to 20 million. Afterpay almost doubled from 5 million to 10 million. So Afterpay was only 5 million customers short last year from Klarna. Now it's 10 million customers short. And that's why this acquisition of Afterpay by Square is beneficial to Afterpay, because they've acquired, in a way, more customers that can use the Afterpay selling channel, whatever it's called. As I went through all the information in regards to this acquisition of Afterpay by Square, there was one thing that made me go wow when I read it. And this was the only thing that made me go wow. And that is that Square has agreed to establish a secondary listing on the ASX. And this is massive. This is huge, because Square's market cap after this acquisition, because it'll all be in shares, not money, will be $150 billion based on the share price right now. That is huge. That's massive, because automatically Square becomes one of the biggest companies that is traded or can be traded on the ASX. And that's massive. And this is a pretty big, strongly growing company. And there's potential that Square eventually becomes the biggest company on the ASX. And I think we can't dismiss that at this point in time. Now, I just want to discuss my indirect holding in Afterpay and how I got to that indirect holding. It all comes back to this company called Thinksmart, founded in 1996 in Australia, commenced operations in the UK. This was an intermediate finance company which markets finance products to both business and business to consumer customer segments via UK national retail distribution, predominantly with the Dixon's Carphone Group. A 12-year relationship extended to 2019. That was taken from the company in 2017 or 18. Anyway, they commenced operations in UK in 2003, sold the Australian New Zealand operations in 2014. And because they only had UK operations, they decided to delist on the ASX in 2016 and then list on the London Stock Exchange AIM in 2016 towards the end of that year. And because they decided to delist on the ASX, a lot of Australian shareholders just wanted to sell their shares. They didn't care about the price. They just want to get out of the company. They don't want to be holding companies on another exchange overseas. And in my opinion, the share price was forced down because of the amount of shareholders who just wanted to sell out at any price. And I did not want to sell at such suppressed prices. So I decided to maintain my holdings in the London Stock Exchange. However, it seems like the company didn't perform over the next year. The share price went down all the way to 5p. But in 2017 or 18, I'm not sure exactly when, because I went through all the annual reports to see when they actually developed Clearpay. But there was no mention of Clearpay in one of the annual reports. I think it could have been 2017. And then in 2018, there was a mention of Clearpay. They have developed this buy now, pay later. And they quickly sold Clearpay, or 90% of Clearpay, to Afterpay for 1 million shares in Afterpay. This is when Afterpay share price was 17 million. So that's about 17 million, and then Thinksmart maintained that 10% holding in Clearpay. Thinksmart sold most of those 1 million shares, if not all of them, but they have maintained a 10% holding in Clearpay to now. And that valuation of that 10% holding, the last time it was done, I think towards the end of 2020, is at about £100 million. And more than likely that will increase over the next few years if they do maintain that 10% holding. However, there is a bit of uncertainty about what's exactly going to happen to that 10% holding because of this acquisition of Afterpay by Square. So there could be a chance Square automatically takes that last 10% in cash, or maybe Square shares. I just don't know at the moment. The last time I did look, even Thinksmart management weren't quite sure what's going to happen. Now to the importance of patience, and this comes back to the Thinksmart share price over the past 5 years since they listed on the AIM. When I bought Thinksmart shares, I think I bought them about 30 cents, and when they listed on the AIM, they're just about above 20p. From about 2016, late 2016 to 2019, Thinksmart completely underperformed. In fact, the share price fell from 20p to a low of 5p in 2019. And more than likely, I would have sold out of Thinksmart during that period of time because I can tend to be a little bit impatient with companies that don't perform over a long period of time. However, with Thinksmart and my holdings in Thinksmart, there is this process you have to go through to sell out of your shares because they're listed on a foreign exchange. If they were listed on the ASX, just one click of the button and they're sold. But because I had to go through this long process to sell out of my Thinksmart shares, it forced me to be patient because I couldn't quite be bothered going through that whole process. So I maintained a holding in Thinksmart shares, saw the share price fall from 20p to 5p, and I just thought, oh well, I don't care about this company anymore. Then they developed Clearpay. Then they sold Clearpay to Afterpay. And the moment they sold Clearpay to Afterpay, or 90% of Clearpay anyway, the share price has been increasing. In fact, the share price has gone from that low of 5p to a high of £1. That's a 20-fold increase in the share price in about 2 years, or just over 2 years. And the majority of that increase in the share price has happened since the COVID-19 financial panic, when the share price of Thinksmart was as low as 12p. And even the importance of patience has even played out over the past few months. In fact, I've been thinking I should go through this process to sell my Thinksmart shares because the Thinksmart share price was drifting down from 90p to about 60p over the past few months. But because I just couldn't be bothered going through that process, I maintained a holding of Thinksmart. Again, patience has been beneficial, even though that patience has been forced upon me. So I am learning some very valuable lessons with Thinksmart example. And the share price of Thinksmart popped up 59% on the back of the news that Clearpay is performing quite steadily and Afterpay has been bought out by Square. So again, forced patience has been beneficial for me. That is all I have for this video. If you do have any thoughts about Square's acquisition of Afterpay, the financial year 21 trading update by Afterpay, and the importance of patience, whether patience is one of the most important attributes an investor can have, I'd love to hear your thoughts on any of these topics. So leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.